Coming up in today's video, global stock markets are calling Trump's bluff on tariffs. 14 countries received letters from President Donald Trump on Monday outlining steep tariff rates that will affect their goods from August 1st. However, global markets shrugged off the news, with both Asia-Pacific and European stocks staging a muted response. And Amazon stock falls sharply after the Prime Day spending shows 14% decline in the early hours. Here's a look at the intraday chart on Amazon, which of course is a very important barometer to the rest of the stock market, simply because this is where a huge amount of consumer spending goes into the market. It's from Amazon, right? Amazon, everybody, I don't know about you guys, but I do a ton of shopping on Amazon. I order everything on here. And so when we see a decline on Prime Day, which is their big marketing event, that is not a particularly bullish thing for the stock. And here's a look at the S&P 500, which is looking a little bit stretched here. We've had a really good run since the lows of the April sell-off, but now very, very stretched in my view, and I do think that we are due for a healthy corrective pullback. While I'm not necessarily bearish on stocks, I do think that it is normal for stocks to move in a zigzag format. And so when you get these sort of one-directional, very little muted pullbacks, I think that it's normal for the market to have a breathe in, breathe out cycle, and perhaps a move back to 600 on the SPY is a very healthy corrective pullback that may be up next. But we'll see. The market also has a great ability to continue to baffle and shock market participants, as very few pullbacks have been a very frustrating part of this rally for many investors who have not been able to quote unquote buy the dip. And when we take a look at the macro screener here on the stock box, what we can see here is that there is a very interesting but mixed outlook for stocks in terms of economic data. We did get last week a really nice jobs report, which was a beat on the both employment change and on unemployment rate in the United States. We saw 4.1% unemployment rate. That's down from the previous 4.2 and forecasted uptick to 4.3. We've had some really good jobs prints, and we see inflation overall cooling in the United States, which offers a very good backdrop for stocks. And take a look at SoFi Technologies, absolutely jumping here up to $20, an all-time high. Never mind, it's not an all-time high, almost an all-time high. We're seeing a huge move, at least for the last few years, a fresh high at $20.11 per share. Kind of crazy. And topping our charts here, also stocks like Fubo, Dollar Tree, Oracle, Delta Airlines, Palantir, all up big today. And Tesla staging a nice bounce back. More on that in a second. Some of our biggest losers for the day are some of the solar stuff. Enphase and First Solar. Take a look at some of these stocks. Obviously, First Solar had a huge run up here recently, as there was a lot of fear about changes in, the big beautiful bill and the administration and their stance on solar and clean energy stuff. But after that fear was kind of not as bad as expected, we did see a huge bounce back in solar stocks. In fact, from the lows here, FSLR jumped by almost 40% at one point. Enphase Technologies also still in a confident downtrend, and I do wonder if this is a bit of a short the rally moment for stocks like Enphase. Another big solar name is Sunrun, which did have a huge rally, but what a crazy chart. Look at these giant jumps, giant drops. And one thing that suggests that this rally could continue is the pretty impressive market breadth that we have here on the market breadth indicator within the stock box. Take a look at stocks above their 20-day moving average. 73% of the stocks we track, 75% above their 50, 69%. Nice above the 100-day, and 62% above the 200-day. And you can see some of the strongest participation is coming actually from the industrial stocks. And this is an area of the market that I personally really like due to some of the stuff that was included in the quote-unquote big beautiful bill. Now, whether you like or dislike some of the stuff that was in Trump's big beautiful bill, let's put that to the side for a second and just talk about where the money is flowing. The money seems to be flowing into infrastructure build-outs, construction companies, energy companies, pipeline companies, trucking companies, transportation companies. These are all industrial companies and an area of the market that I personally like. However, they are a bit stretched. So I'll be watching for an opportunity to see sectors like the industrial sector actually give us a bit of a pullback. And if we do get a pullback, I'll handpick some of the ones that I really like. Caterpillar is a company that is, of course, a very big construction company. I do like the idea of buying this stock, but would need to see a pullback. Somewhere like 350 to 360 would be at the bare minimum a level where I could potentially start to buy some shares of this name. Of course, a competitor being John Deere, builds ginormous tractors that you see all over the country. And a company like ET, which is Energy Transfer. This is actually a company that I recently shorted a put on, and I'll show you that trade now. So Energy Transfer is a pipeline company. They essentially move oil and gas, especially a lot of liquid natural gas, all over the country. And this is a company that I think actually could be a beneficiary to everything going on with the build out in terms of infrastructure and the idea of onshoring stuff. If that does truly kind of materialize in the coming years, companies like ET or Energy Transfer, in my view, could have more upside. So what I chose to do is I actually shorted a put. And by doing this, I essentially am volunteering if price goes at or below $17 per share, currently trading at $17.71, by expiration date, which I chose the 8th of August, I will get assigned the shares. And if I don't get assigned the shares, then I will just keep the premium that I collected by shorting this put. Remember that even if you're new to options, basically you are selling bets to other traders and investors and collecting a premium for selling that bet to them. So I essentially sold someone else a bearish bet because I think that the stock can continue to move higher. And if it does drop, I'll happily buy some shares at $17 per share. Currently, this trade is up $150 and about 29% of max premium. Now, I mentioned I would talk a little bit about Tesla. Let's take a look at it. So yesterday, I actually ended up closing out my short call position on the drop. So yesterday, I ended up pocketing about $720 from my short call position on Tesla when the stock dropped. I shared that update within our Discord server, which will be linked in the description down below. And now the stock price is bouncing back. I have full access to the 400 shares. And if we do get a push back towards, the upper limits of this range that we've been in recently on Tesla, my goal will be again to put on fresh calls or short calls around the $375 strike price. At which point, again, what I'm doing is I'm making a bet that I think the price will be at or below that price by expiration date. As long as that happens, I keep the full premium of what I sold. Now, if we instead get a break above there, then what happens is I get called away from my shares. Now I own 400 shares of Tesla as is. So if the stock breaks away higher and I shorted calls, I essentially just cap my upside to $375 per share. So yesterday I ended up closing out that trade for a profit of around $720. I'm still in the position and floating a gain of about 28.44%. But if you've been watching my videos recently on this channel, you know I am actively trying to decrease my size on this trade by selling covered calls, collecting income on the stock until I get called away. Another stock that I'm doing this on is ExxonMobil, which ExxonMobil, I sold calls at the 110 strike price, and it does look like with some time to go on this one, we'll see how things play out. But if the stock price continues to push higher, then what will happen is I do not see any further additional gains because I am capped at $110 per share. This call option is in the money, and you can see I'm down $344 on the calls that I shorted, but up $1,280 on the shares that I own. Another stock that I own is Delta Airlines, which has gone up pretty nicely from the lows here, but I've also sold a call at $55 per share. And you can see the stock price has traded sideways, making the calls that I sold worth a lot less than when I first sold them. I'm up 61% of max profit here on my Delta calls that I shorted. My plan with just a few days left on the Delta Airlines calls that I sold expiring July 11th is actually to extend these out by another month and collect more premium. Now, we talked about Amazon a bit earlier in the video, which I do own shares in. I own 260 shares of Amazon. And the question is, am I going to do anything about Amazon because of the news today? The answer is no. I think that there's ebbs and flows, and with tariffs kind of muddying the water here and making things a little uncertain, I don't necessarily want to abandon a stock that I really like just because tariff uncertainty could be causing some back and forth. Perhaps what may have happened, this is my guess, is that people bought heavily on Amazon ahead of the supposed tariffs that were coming down the pipeline, and perhaps that ate into a little bit of the profiteering that could go on Prime Day, which is happening today. So my thought is maybe we see a little little bit of a pull forward effect where people bought heavily on Amazon before this Prime Day opportunity came up due to the incumbent tariffs that were on the way. So my game plan with Amazon is to continue to hold my shares. I don't plan to add any shares at this time, but I do also not want to sell the shares because I really like the company. Another one I'm watching is Google, which is a company that I really like and would actually like to build a bigger position in. If we see a downturn in the markets, Google may be a stock that I look to pick up a larger positioning in. Now let's talk about potentially the most difficult position for me to discuss, which is the Robinhood markets shares that I own, ticker symbol HOOD. I really like this stock and I think it has a ton of potential. I like so many of the things that they're doing. They're bringing crypto and more ETFs to European clients. They're expanding their markets. They're bringing crypto currency to traders all over the place. They have a huge edge in terms of the millennial crowd that has traded with Robinhood since day one. Many investors started their journey on Robinhood, and I think it made it accessible to the masses. It's one of my favorite stocks in the market, and currently, with the stock price just going parabolic, I'm in a predicament. I actually sold the $85 strike price July 11th calls against my position. Now, I own 600 shares of Robinhood, and I'm up nicely on those shares, but you can see I've taken a bit of a loss, or I'm in a loss in terms of the calls that I've sold. I think my game plan for this is, with the stock price moving lower here today, I'm considering rolling out my calls further into the future to give myself more time for the stock to correct sideways or pull back, in which case I could make actually a profit on the calls that I've sold. But it's been a challenging one. You can see I'm down 368% on the calls that I sold here. If calls and puts are a little bit confusing to you, don't worry. They're confusing to everyone at first, but essentially a covered call is what you'd want to look up on YouTube or Google if you want to understand how that functions. But my game plan is to extend out further in expiration these $85 strike price calls, or if I can get enough premium out of it, potentially sell the 93s or 94 calls out by another month. To extend my trade, I do really want to stay in my shares of Hood, but at this point, if the stock price continues to run parabolic, then I will be forced to sell the shares for still a profit, but I would be giving back a substantial component of the profits that I've made on this stock through the calls that I've shorted, which have not gone super well. But Robinhood itself, I think, has a ton of potential to continue to move higher, and I think that the stock is stretched. I do think it's overbought, and I do think it has room to pull back, which is why I think that there is the opportunity for me to continue to short calls for the time being. My biggest current position is my position on IWM, which is the Russell 2000 ETF. The reason that I think the Russell has potential to continue to grow and that small cap companies could see a very strong push higher is because of my expectation that the Fed is likely to cut interest rates this year. Now, I didn't start saying this now. I've been kind of thinking that that was potentially going to happen this year for a couple months, which is why I initiated a large size position for my account on the IWM ETF, and why I've trailed stop losses from my initial level here up to where it currently sits, just below market structure. I'm looking to continue to trail stops on IWM and see how far this winner wants to run, but I'm currently floating a good sized win on this trade. Now, of course, context is important. I've had many losers over time as well, and I don't just have winners like this all the time. This is a really nice trade, but there's also times where I have months where I lose $30,000 or $35,000. So please understand, when I show you these really big winners, I'm on a really good hot streak in 2025, but there are also times where I'm losing a lot of money and giving back profits to the market. Such is the way trading and investing typically goes. Part of the reason I like Amazon in terms of their business model is, first of all, they have huge revenue growth over time, and their profit margins have been steadily rising over time as well. The stock is not cheap by any means if we're taking a look at a price to earnings ratio. However, relative to its own history, if we actually zoom out further, we go back, let's do like 55 months, let's see how far back we can go, we can actually take a look at the historical PE ratio for Amazon. And what you can see is that, there's been many months or many quarters where the PE ratio is in the 50s to 60s. So with a PE ratio closer to the 40s to 30s, yes, the stock is very expensive and has been for many, many years. But I think on a relative basis, I still like the idea of staying strong with my Amazon shares. We can also see that in the last 4 quarters, we've had 4 back-to-back beats in terms of earnings per share estimates versus what actually was reported for the company's earnings. So Amazon is a stock that I'm willing to stay with and would actually potentially consider adding more shares if we did get a drop in share price along with the full market selling off for a little bit. If we take a look at the weekly chart for Amazon too, what we've seen is over the very long term, we've actually seen Amazon not go a very far amount. We did put in fresh highs going back to February of this year, but what you'll notice is that we're trading in a similar range to where we've been over the last, year and a half, 2 years on Amazon. And there was a long period of time before that where the stock actually corrected sideways. And I think this is what sort of brought the PE ratio down, is that earnings continued to grow while the share price kind of corrected sideways. And this is something that we hear often in stocks, is correcting sideways while still growing earnings and revenues can make the stock look more valuable on a relative basis. So that big dip that we saw in 2022 was a huge buying opportunity. And I also took that as an opportunity in April to buy a name for my portfolio that I really liked for the long term. You can track all of our different financials and tools here within the stock box. The link is in the description down below. And just so you know, if you made it to the very end of this video, we are currently offering 45% off on the stock box right now. It is a really powerful product and a pretty low cost product compared to our other ones on our website if you're familiar with the Edge Finder. If you are interested in exploring the stock box and its full list of features, head over to a1trading.com or click the first link in the description down below to speak directly to our support team about getting this 45% off discount. It's a one-time payment to get access to all of our tools and data in the stock box. Thanks for watching.